Robert, it's been a while since we've talked, and in recent weeks we've added to our pro services with dedicated analysis of extended hours in the stock market. Tell us about the extended hours market.
Well, Dan, it's good to be back on with you. The extended hours market is, of course, been happening for many years. The 24-hour nature or close to 24-hour futures markets, and they trade. A lot of times they'll move with foreign markets overseas. They will move with news events that occur, and so we were launching this new service so that traders can take advantage of those movements as they occur in non-U.S. hours.
24 hours, that sounds like it could make somebody pretty crazy.
Yeah, well, it's a lot of hours, and some U.S. nights, overseas days can be very active, and sometimes it's not. So it just depends on what's going on in the market that particular day.
Does our extended hours overnight analysis use your Elliott Wave counts?
Yeah, I'm sort of the overseer of the slightly bigger picture count that we're using, and then the analysts that are writing the commentary throughout the market day, of course, will adjust the count on a short-term basis. But yeah, in general, they line up with the wave counts that I'm publishing on my U.S. stocks intraday service.
Got it. And for your regular hours analysis, who's the typical investor or trader that subscribes to pro services?
Well, I'm sure we have a gamut from kind of newer traders who are trying to get some help with their trading education. And then I know we have some people managing money on a professional level. So it runs the gamut. And I try to aim the service so that people on both ends of the spectrum can benefit from it. Teaching some Elliott Wave, but yet having some advanced concepts that the more seasoned professionals can appreciate.
That's exciting that it can reach such a broad range of skilled traders.
Yeah, and again, I like to keep in mind where everybody's coming from. It helps to get the feedback. I get emails from subscribers frequently, and I get an idea of what the questions they have and the concerns and the things they're trying to learn. And so I try to gear the commentary so that it's helping out a whole range of subscribers.
You mentioned new traders in your recent conversation with Todd Gordon, and your advice seemed very wise. Can you summarize that again for our audience?
Yes, I think one of the temptations that we all face as traders, and that includes myself, who's been trading for quite some time, is this sort of the desire to always be in the market. You know, you can't make money on a trade if you don't have a trade on. So you want to have a trade on so you have the opportunity to make a profit. And that's not always the smartest move. So what I recommend is for people to wait for a high confidence setup where you have a clear Elliott Wave count, you have some indicators that are potentially like very overbought or very oversold, and where you have the odds in your favor that the market is going to make a big move. Sometimes the market doesn't move a whole lot. It goes sideways. It looks kind of random. Other times the wave pattern is very clear, and we can have a much higher confidence level in those situations. So I think the key is just to be patient, wait for the more high confidence setups. And of course, that's what I try to offer on my service. I mean, I have an opinion at all times, but that doesn't mean that every single day is the equal opportunity, high probability trading setup. So I try to let people know when I see these higher probability setups come along, because that's, I think, the best way to find success in trading.
Of course, that makes sense. You have to have some strategy behind it.
Right. And so again, when you have a clear wave count, when I look for things like divergences, to turning points to help me add to my confidence level.
Do you have a recent example of a high confidence setup to show us?
Yeah, I have a chart here showing the wave count in the S&P on January 30th, and I identified a wave 4 contracting triangle, and at that point was expecting a thrust up to new highs. And we did get that pattern, and that the fifth wave moved to new highs. And then on February 7th, on the second chart, I showed the completed count, the completed 5-wave thrust out of the triangle, and we broke short-term support and a little moving average that I was following at the time. And that was a sign that that thrust was over. So that was an opportunity to have been on the long side of the market using my preferred wave count.
And in addition to the wave count, are there other indicators that you look at to add to the confidence?
Yeah, definitely. There's some traditional technical indicators such as relative strength RSI, looking for divergences at tops or bottoms. In the stock market, which is one of the great things about it that I like, you have some extra indicators such as the VIX. And when the VIX is not making a new low, for example, when the market is making a new high, that's a divergence that adds to the confidence level. I also look at things like the put-call ratio, which are updated throughout the day. And if the market is showing a very low put-call ratios as the market's making a new high, that's a sign that traders are very optimistic. So I take into account a lot of these things. And so another one is moving averages. If the market's been rising above a moving average and all of a sudden it breaks below that moving average that's been containing all the recent action, then that's a sign that we've probably seen a trend change. It's certainly a change of character. So I look at all these things to give me a little confirmation that maybe we've seen a fifth wave bottom or fifth wave top, and we're seeing a trend change, and now we can go the other way in the market.
Robert, thank you so much for your time today. I'll look forward to speaking with you soon.
Sounds good, Dana. Good to be back with you.